Another day, another dollar. So this morning, pre-market for both crypto market and the stock market, everything was red. When the markets opened up, pre-market started becoming a little bit less red. All of a sudden, it started becoming neutral. And at the end of the day, all three indices for the stock market are up, and the crypto market actually made some sort of a comeback. Bitcoin is nearly back at $20,000 a Bitcoin. So the question is, what gives? This Wednesday is going to be the FOMC meeting, the Federal Open Market Committee, and it's a very, very important meeting. After this Wednesday's meeting, this is going to be the meeting for September. There is no meeting in October. And the next meeting is actually going to be on November 1st in the beginning of the month. And we're not going to get any CPI data, which means we're going to get CPI data in October. So what the heck is going to happen on Wednesday's meeting? And why did the market actually come back? I have a little bit of a theory going on. I'm not saying I'm right and I'm not saying I'm wrong, but let me try to break it down for you. And when I'm talking about the markets, I'm talking about both the crypto market and the stock market, because both of them are intertwined, at least for the immediate and foreseeable future. All right, let's review the market. The NASDAQ ended 0.75% up, the Dow Jones ended 0.64% up, and the S&P ended around 0.69% up. So all in all, around a 0.7%, right? That's not bad, especially because everything was down. Well, let's take a quick look at the crypto market. As you can see, Bitcoin hit 19,500 in the last 24-hour period. It's only down 1% now. Earlier today, I was looking and it was down several percent. It did have a comeback. If you click on Bitcoin, as you can see, it was super fluctuating. It hit the low 18,000 and now it's hovering on the second half, the northern part of 19,000. This is actually a really, really good trend. So the question is, what gives? This is the CME group. This is what tracks the FOMC meeting. There's 1 day, 20 hours for the FOMC meeting, but this is what we really want to look at. Over here, it says the target rate probabilities for the 21st of September. So the current rate is 2.25 to 2.5%. There's an 82% chance that this is going to be 3 to 3.25, which means a 75 rate hike. And there's an 18% chance it's going to be 3.25 to 3.5, which means it's going to be 100 basis points or an entire percent. We already had 2 FOMC meetings where they raised by 75 basis points. This is a record in the last several decades. And if they raise by 1%, this is also a record of several decades. Even if they go 75, and this meeting is going to be 75, also a record in decades. We have not seen this aggressiveness since the 1970s into early 1980s. So the question is, what gives and why did the market start coming back a little bit? Obviously, all eyes are on what's going to happen on the Federal Reserve's meeting on Wednesday. In my personal opinion, I think that they will be raising 75 basis points, and I have been saying this on this channel for the last 3 months or so. I don't think that it's going to be 100 basis points, and I have my reasons of why. Before I go into it, I actually want to show you a few tweets from Cathie Wood, Elon Musk, and a couple of other people that talk about something called deflation. Inflation means that everything becomes more expensive. Deflation means that everything becomes less expensive. Now, there's a very, very interesting reaction. So inflation means since things are going to be more expensive tomorrow, you want to go out and buy stuff today, which essentially increases the prices. Deflation, since the prices are going to be cheaper tomorrow, you don't want to buy today, you're going to wait until tomorrow. And that decreases the prices. What you want is a neutral effect in the market, in the economy. You don't want a deflationary or an inflationary effect. The thing is, when the Federal Reserve raises interest rates, this is actually a lagging indicator. Everything is a lagging indicator. So there's some people, some train of thought, and I'm going to read it to you right now, that is saying that the Federal Reserve already started curbing inflation and inflation is already going down. And if the Federal Reserve is going to keep being super aggressive, they're going to tank this entire economy worse than an inflation tank. I know it sounds counterintuitive and counterproductive and makes no sense, but it does kind of make sense if you think about it. Now, I'm not saying inflation is gone. I'm not saying that's what's going to happen. I'm just saying if you think about what deflation is. Let me read you this tweet by Cathie Wood and Elon Musk. This tweet came out a couple of days ago at the end of last week by Kathy Wood, and she said, actually, deflation is in the pipeline. She's saying heading for PPI, which is the Producer's Price Index, CPI, which is the Consumer's Price Index, and PCE, which is the core inflation. She says, from COVID peaks, lumber is down 60%, copper is down 35%, oil is down 35%, iron ore is down 60%, dram is down 46%, corn is down 17%, Baltic freight rates is down 79%, gold down 17%, and silver is down 39%. To this, Elon Musk actually said a major Fed rate hike risks deflation. You could see it right here. She goes on to say, as measured by the Manheim used car price dropping in August, roughly 50% at an annual rate. What does that mean? 4% in August. And if you take 4 times 12, that would be roughly 50% reduction. What she's trying to say, what Elon Musk is trying to say, and a couple of other trains of thought when it comes to the economy is, hey, it's already working. It just takes time for you to see this because everything is a lagging indicator. She said, if residual auto values deteriorate accordingly, the $1 trillion in U.S. auto debt will be in harm's way. Autos were the best credit in 2008, 2009, as individuals prioritized their auto loan payments at the expense of mortgages so they could get to work and stay employed. This time around, thanks to ride-hailing and soon less expensive autonomous taxis, individuals are likely to prioritize auto debt payments over mortgage payments, which could turn backwards-looking quant models upside down. Now, Elon Musk goes on to say, a major Fed rate hike risks deflation. Meet Kevin says yes. And then you got a guy called Gary Black. Who exactly is Gary Black? Managing partner, the Future Fund LLC, SEC registered investment advisor. Very good. And he says, the Fed is heading down the wrong path by raising rates aggressively to fight a supply-driven inflation caused by COVID that has already peaked. The Fed is making the mirror image mistake it made in 2021, allowing rates to stay low for too long by pushing up rates so fast right now. So I have my own thoughts and my own theories. I also think that inflation peaked. I think that gas is the driving force for inflation. And I think that gas was not enough to force inflation to go down because everything still kept going up. However, inflation was not terrible. It was 0.1 up. We didn't get a reduction, but we didn't have a crazy increase. So yes, since everything is a lagging indicator, it's possible that in the next CPI report, inflation is going to go down. That's why I think the Federal Reserve is not going to raise by 100 basis points. I do believe they're going to be raising by 75 basis points. If they raise by 75 basis points, I believe the 100 basis points was already priced in last week when we had that crazy red. As a matter of fact, last 2 weeks. So if we have 75 basis points, it's almost going to be like a relief rally. I showed you the CME futures, right? The predictions of how much is going to be, the FOMC is going to be raising. Before the CPI report came out, it wasn't 82 and 18. It was like 68 or like 80% said that it was going to be 75 basis points and 20% said that it was going to be 50 basis points. It completely switched and went up. Furthermore, Elon Musk was asked, what do you want to do about inflation, right? Should it be 50 basis points? Should it be 75 basis points? Or should it be 100 basis points? And to this, Elon Musk simply responded, cut it by 0.25. What does that mean? Who knows? Does that mean that we should only raise by 25 basis points? Or does that mean that we should reduce the 100 by 25 or 75 by 25? Nobody knows what it exactly means. Let me show you the quick article. This guy is called Jeff Gundlach. Jeff Gundlach happens to be a billionaire. They call him the bond king. This guy's a very conservative investor, nothing crazy, no thrills, no frills, and he doesn't really do too much talking. So I'm going to go a little bit lower over here. So he was asked the question, while admitting that the stock picking is not his forte, he said, you always want to own stocks, but I'm a little on the lighter side. Nonetheless, he sees emerging markets as the biggest upcoming opportunity for equity investors. First and foremost, this is growth, emerging markets. I love it. Citing the risk of deflation, he suggested that investors dive into a long-term U.S. debt securities, buy long-term treasuries. He advised, emphasizing, and I quote, the deflation risk is much higher today than it was in the past 2 years. Regarding the time frame, he clarified, I'm not talking about next month. I'm talking about sometime later next year, certainly in 2023. And then it goes on to say, recently, Tesla's CEO also warned that the Fed rate hike could lead to deflation, echoing the statement by ARK Invest CEO Cathie Wood that leading inflation indicators like gold and copper are flagging the risks of deflation. Now, I'm not sure how you feel about this, but I started doing a little bit of research, and it seems that a couple of people are starting to think that we might hit deflation, which means that the Federal Reserve already did their job to reduce inflation. And since everything is a lagging indicator, by the time they keep raising interest rates and by the time it actually hits the economy is going to suffer, and they're going too hard for too long. Now, Jerome Powell did mention this before in some of his FOMC meetings before he started raising, like 1 or 2 meetings before he actually started raising the interest rates by 25 basis points. He says, we don't want to raise too early because it takes time for the economy to feel us raising the interest rates. And by the time the economy recovers, it's possible that it would have recovered regardless, and inflation is transitory. And meanwhile, we're raising the federal funds rate, and that's tanking our economy. It's very, very important. All eyes on the Federal Reserve on Wednesday. I do think they should be doing it 75 basis points. I never thought it should have been 50 basis points either. I never think it should be 100 basis points. I think 75 basis points is the right thing. And I do believe the next meeting after this meeting is only going to be 50 basis points. I still have a theory that our inflation did peak, and I do think that our next CPI data is going to come down. We'll see what ends up happening. As always, I'm not a financial advisor. This is purely entertainment and educational purposes only. Guys, let me know in the comments down below what you guys think is happening with the economy. Are we at risk of deflation? Are we still at risk of inflation? Is inflation going to keep going up? And what do you think the Federal Reserve should be raising the interest rate by? 75 basis points, 100 basis points, or 50 basis points? But because there's some of these people talking about deflation, and that's why I think that the market started recovering today, possibly one of the reasons, because people are like, okay, it just might be 75 basis points, not 100 basis points. We'll see what ends up happening. Thank you so much. I'll talk to you guys later.